Welcome to Wall Street Week, the show of record for long-term investing. I'm Anthony Scaramucci.
And I'm Gary Kaminsky. The big worry this coming earnings season, the banks. J.P. Morgan getting things started on a positive note this morning, beating estimates. Other banks out today include Citigroup, which reported better than expected results, but profit came in slightly lower. PNC, another winner, topping Wall Street's expectations. Investors keeping a close eye on Wells Fargo, which did beat estimates, but profit slid slightly over news about its sales tactics scandal, and will likely see more fallout in the future results.
Next week, we're going to see 92 S&P 500 companies reporting, including more of the country's largest financial firms, Morgan Stanley, Goldman Sachs, American Express, just to name a few. So just how crucial is it to hear good news from these companies next week? We're going to turn now to former Goldman Sachs partner Peter Kiernan and former Dallas Fed advisor Danielle DiMartino Booth. Peter, let's start with you. What's your outlook, not only for next week, but for the economy in general?
I think, the basic challenge we have right now is you have elevated stock prices and earnings growth that just doesn't seem to be measuring up. And I don't know how long those two things can be out of balance. So, you look at it, how are you going to grow your business at 15% earnings with 1% economic growth and nothing happening in Europe? To me, that's the essence of the question.
But the stock market has levitated because of what the Fed has done. And let me turn to Danielle. Danielle, the Fed, which has really, created this base for asset prices, for stock prices especially, they don't seem to be indicating that they're going to do anything different in 2017, do they?
It doesn't seem like it. And speaking of levitating, the Fed is also highly responsible for levitating the bank earnings. If you look into the weeds a little bit, it's all the trading revenue that was surrounding the uncertainty with Brexit and with Fed speakers going in 18 different directions. And that's helped drive a lot of volatility in the bond market and in the stock market. And those trading desks took it all the way to the bottom line this past season.
That's a really interesting point. I hadn't even thought about that with the earnings out this morning, that the volatility which the Fed is helping create actually helps the banks. It doesn't help them in terms of their net interest margin, but it helps them in terms of their trading volumes.
It helps the hedge funds, too, because you're creating more dispersion.
There's no question. I think if you look at what the estimates were, J.P. Morgan beat by $1 billion in the FX and other kind of trading activities, fixed income. And Brexit was the gift that keeps on giving to some of these desks because there was so much back and forth. So both Citi and J.P. Morgan had wonderful news on the FICC, fixed income, currency, and commodity side.
J.P. Morgan's fixed income bond market trading revenue was up 48% over last year. That's a huge number. Thank you, Fed. Thank you, Brexit.
So Danielle, when the Fed governors get together in December, because I think we can all say that nothing's going to happen in November. So when they get together in December, will they be looking at the bank results to give them an indication as to whether or not they pulled the trigger?
Maybe. That might be something of a stretch. I mean, right now it seems like there are quite a few catfights going on around that big conference table in Washington because every single time a Fed speaker opens their mouth, the message is completely different than the prior, and that just it's not stopping.
And what's your take? I mean, where do you expect this is going to happen in December? Do you have a call on that?
Look, I think that what happened in September tells us what's going to happen in December. Over the past 21 years, that's a long time, we've only had 2 Federal Reserve Board governors dissent. All other 67 dissents since 1995 have come from the presidents. So Yellen would rather withstand a triple dissent from, like she did in September, and hold off on raising rates than have to suffer the optics of 2 governors, Tarullo and Brainerd, both dissenting if she insists on pushing a rate hike forward in December.
So there's a little bit of Fed politics. Yeah. Do you think the Fed has lost some of its credibility politically?
Oh, there's no question about it. It's basically turned into a debating society. And what you have is one opinion that matters and a whole lot of other opinions that get voiced. What frustrates me is if you look at the way banks work, you have to divide them into the small banks and the big banks. But if you look at a money center bank like J.P. Morgan, if rates go up, yes, their net interest margin will go up, but so will their capital markets activity. We've been stalled in a lot of the issuance, and I think this is going to change, excuse me, if we have a bump in December.
Peter, one of the things that all the managements talked about earlier today was the fact that loan growth continues. How is loan growth continuing if the economy is not really operating?
Large company loan growth, by the way, Gary. I mean, the small businesses,
right.
there's no loan growth.
So is that where is that it's only really happening at the super high end, or is it that they're deciding where they want to lend the money, but they're showing loan growth?
I'll tell you, here's a way I look at it, because it's a great question. Let's look at the small banks for a second. There's been a lot of merger activity over the last 3 years. It was running at about 300 banks a year. This year, it's 180 banks, and the multiples have gone from, call it 25, 26 times to 22 times. The other thing that's starting to happen is if you are a community bank, you don't have the same loan demand that you're seeing at some of the big banks, and net interest margins become really, really important. Trying to play the float as narrow as they are, they don't have the, if you hit them with compliance at the same time as low net interest margin, they're really struggling. It's driving a lot of the consolidation. And in fact, there are some banks that are sharing compliance teams because they can't afford a full-time compliance in their own shop. So I think the small banks are really looking for that rate bump.
Danielle, one of the epitaphs of this whole thing is that the Federal Reserve has helped the large corporations, has helped the very wealthy, but 97% of the people in the middle are struggling. What would you say to that argument?
Look, that came out in this morning's retail sales data. That came out in the consumer confidence data. Consumer confidence expectations for the future fell to a 2-year low. Expectations, current expectations fell to a 1-year low. If you strip out gasoline sales, which were a huge boost to retail sales, which households don't want prices going up at the pump. But if you look at what they call the core retail sales figure, it rose by 2.5% year over year. That's the lowest level in 11 months. I think households are waving a white flag that the Fed is frankly ignoring.
Peter, we started the block talking about the fact that asset prices are up and you're concerned about whether the economy and profit can grow. So what do you tell an investor right now? This is a long-term investing program. What do you tell an investor right now they should be thinking about for the next 3 to 5 years?
I would say, first of all, don't pay attention to the low volatility. Everyone says we got a calm market. What's going on right now is a change. If you miss your earnings, because everyone's been saying wait for Q3, Q4, we're there. We're at the end of the year. If your company does not deliver earnings, that stock you own is going to get punished. So there's a special kind of volatility reserved for people who don't perform. This has become a market of stocks, not a stock market. Be incredibly careful where you invest. And if you have somebody who looks like they're not going to meet their earnings, do not hang on to that stock. You're going to get punished.
I want to say thanks to both of you. Thanks to Peter Kiernan and Danielle DiMartino. Peter has a brand new book out, American Mojo. It won the International Book Award for nonfiction, so thank you for bringing it. And please read it. It's excellent. Wall Street Week. We'll be right back.